Hello, my name is Mark Holweger. I'm CEO of Legal and General Insurance in America. And welcome to this panel. And what we're going to be looking at is technology, how it is affecting us in our industry. And how do we make the right decisions? Because really conscious, there's so much happening and things are happening even faster than we ever thought as a result of COVID. And technology has come front of our minds, making sure we're making the right decisions about all the choices out there. So we've got a great panel today, and I'm going to ask each panel member to introduce themselves. So, and also tell us a little bit about their business as well when they do the introduction. So on that basis, I'm going to start off straight away, and I'm going to pass over to Jason. Jason.
Thanks, Mark. Glad to be here. Thanks for having us. My name is Jason Lee. I am the CEO of Broker Service Marketing Group, as well as the principal owner of a term insurance technology platform called Vive. Broker Service has been around since 1972. Vive's been around for about 13 years. And really excited to talk about technology and the impact on the business today. It is the topic.
It is absolutely. Thank you very much, Jason. So then over to Peter.
Thank you, Mark. I'm CEO of KAFL Insurance Resources. Our company was founded back in 1991, and our company is an employee-owned company. We work in the areas of life insurance, disability, annuities, employee benefits, business owner exit planning, as well as Medicare. And very excited to be talking about how we're utilizing technology today.
Great to see you here. Thank you very much, Peter. And then I'm going to pass to Scott.
Hey, good morning, everyone. My name is Scott Ferguson, and I'm the Chief Executive Officer of TechFishent. We are a fintech, insurtech spinoff from Ash Brokerage. We launched here January of this year as an independent company. We focus on tools for the BGA community, such as case management and processing, as well as data analytics and our dynamic quoting platform, which is an outcome-generated life insurance quoting platform. Looking forward to the discussion today.
Fantastic. And finally, Mike.
Thanks, Mark. I'm Mike Kalen. I'm head of Covr Technologies. We are a digital BGA focused on helping financial institutions bring life insurance and related solutions to their customers. We have an advisor interface and a direct-to-consumer platform. Our whole passion is to take as much friction out of the process as possible, and excited to be on the panel today.
Thank you very much, Mike. So actually, I'm going to sort of go straight over the first question. Over to you, Scott, initially. When we look at, what you're producing, what outcomes are you looking to actually achieve by leveraging the technology that you've created? And particularly, right, from a BGA angle as well.
Yes. So from our perspective, we first of all looked at what it meant to really provide high quality the case management platform out to the BGA space. So that platform that we offer really is all about the efficient and effective processing of a life insurance case from start to placement. But for us, where we really found the ability, to your question, to lever the technology was by studying outcomes. And by studying the outcomes of those cases, we found that there was a pretty decent discrepancy between the different carriers offering cover at a similar price. So even though there was not a lot of difference between the price points of these covers that were offered, the outcomes, the placement ratios and the customer service, the time it took to get that case done, very different. And so we really believe that TechFishent offers a new way of looking at life cover, a way of understanding where the best fit for your customer is.
No, absolutely. And I can see it's not all about price. There's these huge, important dynamics going on. And that's what technology can give you. And so, Jason, same question to you then as well, from a Vive perspective, what were you exactly looking to leverage with your technology?
Yeah, kind of like what Michael said just a moment ago, we're trying to change the way that term insurance is selected and processed and delivered. And the approach that we're taking is really to work with each carrier that's on the platform to understand what their sort of technological landscape and journey is going to be over the next several years. We know it's a moving target, and we know each carrier has slightly different aspirations, slightly different platforms. So we needed, what we wanted to create was a limited carrier platform of the leaders in the term insurance space to start, and obviously getting beyond term insurance. But the big problem that we all face as distributors is this high volume business that basically, it takes almost the same amount of effort to process an $800 premium as it does an $80,000 or an $800,000 premium. And the mission is really to try to understand how to best partner with the manufacturers that are leaders in that space, and then deliver those technology efficiency gains to our user base.
Yeah, it's a really interesting point. Like you say, you have to do the same thing regardless of the value, and there's huge costs associated with that as well. And Mike, so same question to yourselves. What were you looking to leverage when you were looking at your technology?
Yeah, we kind of understand where we sit in the value chain. We sit in between the insurance carriers who provide the solution for the client and the person or the technology that's sitting with the client to get a solution. Couple of things that we know that clients require choice. So to bring best in breed solutions for term life insurance, permanent life insurance, asset-based long-term care, disability income, I mean, that's the solutions that we're solving for the clients. And to try and both bring our own technology where we can take steps out of the process, and as Jason said, normalize the experience, because carrier X is slightly different than carrier Y. And to put it in an easy to understand, affordable platform, that's been our passion for 4 years. And the good news is that there are starting to be some really powerful technologies and some standards driven by, I'd say, the creation of APIs and the ability to absorb APIs into a common experience. And then the rapid acceleration of non-medical, non-invasive underwriting to get a lot of insurance, $1 to $3 million of coverage. I mean, there's some cool things that we're all starting to accomplish together. So that's really some of the foundational components of what we're focused on.
Yeah, and it's interesting how you mentioned this together, because the fact that your partners that you're partnering with must be able to connect with all this technology. And Peter, over to yourself now as a BGA. And an early adopter of a lot of these technologies, what were the sort of key things you were trying to address to help maybe other BGAs think, what should be top of my list, when I'm looking at technology that I'm trying to fix?
Sure. So one of our core values is innovation. So adopting technology early on is consistent with that core value. And we are really looking to try to adopt that technology that is going to enhance the consumer experience and make the advisor's process more efficient, allowing that advisor to engage in more insurance planning conversations. We also feel that adopting technology early also plays a role in our marketing side. It is a way that we, as a BGA, use technology to differentiate ourselves, as well as also we are looking for a specific advisor demographic, that advisor that is not satisfied with the status quo of the traditional process and is looking and open-minded to trying out new processes. So that's both a process as well as a marketing-driven need that we're looking to try to satisfy by adopting technology.
Actually, I'm just curious, Peter, are you seeing there's an increase in those type of advisors who are looking for new ways of doing business? Are you seeing is more activity in that area?
I think that we're starting to see some clear distinctions between those advisors, and sometimes they are also the advisors that we as a BGA have not traditionally engaged with, that are willing to engage in the insurance conversation with the help of some of this new technology to help the process, and also a demographic group that is a little bit more reluctant to try the new technology. So some very clear distinctions in the advisor group.
And so, Jason, I'm going to come back over to yourself now then. So with all this happening then, how is the role of the BGA, how is that going to be changing, do you see, in the face of technology?
I think the biggest thing is it really presents the opportunity for us to get back to being distribution companies. And if you look at the last 30, 40 years, what's happened to a lot of BGAs and distributors is they've really become servicing and processing entities for large numbers of transactions. And it's really forced us in a way to take on a part of the manufacturing process that we felt we had to deliver the type of service that brokers and clients demand, but that what we would really prefer to do is be able to hand that process back to the manufacturers and then collaborate with them to make sure that the service is delivered in a satisfactory way, and then really focus our efforts on distribution, working with producers and their clients to develop additional business opportunities. And I think as technology and medical information, the digitalization of all that, if that comes into play more and more each year, that really presents an opportunity for us to innovate the process and get back to being more focused on increasing distribution.
Yeah, and it'll be interesting to see that change in mindset for the BGA, though, being willing to let go and trust the technology. That's going to be the big thing, I would suggest, Jason.
Not easy. I mean, it's not, but it's coming. It is, as you've heard the others say, this is incremental. It's not going to be, a light switch where all of a sudden everything is fixed. And this is going to be, and it's going to vary by carrier. I think it's not going to be identical for every insurance company. So the ability to interface with the market leaders and really get there first, as you've heard them say, I think is a really critical point if we want to grow this business.
No, absolutely. And actually, Peter, I'm going to just pass back to you on the similar sort of question as well about how it does change the role of the BGA, but particularly as an underwriting advocate as well, which we know BGAs, historically got very involved in. So where's your thoughts on this?
So, a lot of the conversations have been about the streamlining and making the underwriting process more efficient. And there certainly is a great deal of room where we can all improve in that area. However, the underwriting process is not just science. There is an art to underwriting the difficult case. And that role for the BGA actually becomes more essential for a positive consumer experience to make sure that the BGA is using their knowledge and experience to make the appropriate recommendation based on someone's health to go to that particular carrier. Certainly with new technology, with the adoption of the processes that go along with that technology, such as electronic medical records, there's actually more tools that are put in the hands of the BGA to become a more proactive advocate for the consumer and enhance the process.
Now, thank you, Peter. So thing with technology can sort of take us so far, but what else do you think needs to take away the pain? Because boy, the process in life insurance, historically it is painful, and it's not necessarily a delightful experience. How can we make it delightful? What else needs to change besides just being driven by technology? And I'll pass that one first of all to Scott.
Yeah, thank you. I think that's an insightful question because ultimately many of the technologies that are out there, the kinds of things that people are able to integrate with, they certainly talk about the amazing work that's going on in there. But really, if you're taking something that was somewhat painful maybe to begin with, and then you just put a digital face on it, I'm not sure you're really solving any problem. What it seems to me to be some of the ways that this can really take away the pain is at its core, the enhanced reflexive question, right? Rather than being asked the same thing over and over again, to have it asked once. And that's just the simplest example. I think it gets a lot more subtle and actually more powerful when you start to realize that if you have these things, and you most likely have those things, but you don't have these things. So conducting the interview, walking the client, the end actual insured, through that process in a way that says, look, I'm going to reduce this to its absolute minimum, and I'm going to ask questions that are appropriate to where you're at. I think those are some of the ways that we take it. And quite frankly, that takes a tremendous amount of technology and power to be able to provide an interview like that.
Yeah, and same question then to you, Mike, as well. Where would your head be on, what else needs to happen to take the pain of the process away and to create some delightful experiences for customers?
Yeah, I start this answer with the end in mind. I think one of the things that's really starting to emerge is that these products have a real place in financial planning. We tend to focus on the pain of the purchase journey and taking all the friction out, which I'll get to in the second part of my answer. But, once you buy these products, they have a real place in your financial plan. So what creates the joy is that the customer bought something that has value and can be part of your living financial plan. So we've got all these customers and financial advisors that are aggregating their assets. We all love to see our total picture, whether we do it in Mint or Money Guide Pro or, Vanguard or Fidelity aggregates all these things that we've collected, and the products we sell have real value. Like life insurance is typically the biggest number on a family's net worth statement, right? It's the biggest number. So the thing that creates the joy is I just did something as a customer that created a big number on my net worth statement, whether that's the long-term care benefit, the death benefit, the cash value accumulation, or the disability benefit. So that creates the joy. I just did something. I moved money from one pocket to the other in order to create a bigger number on my net worth statement. That's the end goal. Then the way we help them get there has to be more enjoyable, right? So the pizza tracker is the best analogy I can come up with. We all love it when we order our pizza and it goes in the oven and it shows up in the door and we get a little text message every step along the way. So even if we have to put the client through a 60-day journey because they still have to get medically underwritten, we should still be telling them that their pizza is on track. And that creates a lot of positive reinforcement that I'm moving along. Because if the client's going through medical underwriting, they want to get the best rate. And as a BGA or as a provider, we're still doing a great job for that client. So let's give them the positive reinforcement that they're doing the right thing to get the best product for their financial plan.
No, thank you, Mike. And if I'm going to be getting pizzas, make sure I've got pepperoni on mine, then I'll be delighted. But one thing I want to pick up, though, maybe on technology is, okay, hey, I'm going to go back to the pizza analogy. I can't think of many other industries where I think I paid for a price of something online and then I get to finally actually buying it and it's issued other than applied for, and I've got a different price. How does technology, help solve this issue? Because now I'm not going to be so delighted with my pizza when it arrives and I found out I've got to pay twice as much for it. So, Scott, what would be your view on that?
Yeah, I like that too. I mean, that hits home. That the challenge I think that we have in the industry is that other than applied. And when we looked at it, we found that roughly most carriers around the high 50s to the low 60s in terms of placement on what was originally asked for. And you look at that and you say, well, that actually might be better, and it reflects all of these different circumstances and conditions. But the reality is, to the customer that's buying it, that's a 1 in 3 chance that they're not getting what they originally thought, or even getting anything at all. So the way that we figure that you have to look at that is you have to say, well, look, if I look at other cases, if I look at other times that I've had other clients apply for cover and they got it, can I find the right match, the right profile, if you will, to look at that customer and say, you look just like these people over here and they all got it. So let's focus on not only, the kinds of information that you can share, the client can share with you as you go through the process, but the carrier itself, the right one to pick.
No, absolutely. I'm going to now just move to balance of power. And just as an observation, I've tended to feel that the balance of power has been leaning towards the carriers historically. When you come to these platforms where the carriers are very much saying, this is what we're going to do for you. Do you think, and so the lack of flexibility from the carriers and also their ability to integrate as well into what you're building, do you think that balance of power, though, might shift going forward? And I'll put that to Jason first. What do you think about the balance of power?
Yeah, well, I think fundamentally there's going to be really almost a new industry that comes out of this digitalization of medical information that we're about to go through over the next several years. Whether it's 3 years, 5 years, 7 years, it's hard to say, but I think the access to that data will be almost ubiquitous. I think it's just a question of how quickly, not if. And I think that really presents some potentially, just fundamental changes in how these products are priced and what technologies, but also what data is readily accessible in real time. And I think if you just take a look at not only the digitalization of all of our records, and I don't mean like patient portals that exist now where there's images of data, but actual, consumable data, and then the pooling of that data and what can come out of, the pooled data, millions of de-identified individuals, and the mortality implications of that in terms of an insurance company's ability to make a better assessment in virtual real time. And I think that we're not there yet, but it's coming, and it's gonna have pretty sweeping implications for who can take the data in and find the insights that they need to find from an actuarial perspective to get comfortable. And that's not to say that I don't think people, insureds that is, might not be willing to pay a little more. I think if you could have a policy right now, would you be willing to pay slightly more than going through a more elongated process? Even if, to Mike's point, even if we are giving them, the pizza tracker, so to speak, if I can have it right now, and it's slightly more because we've got to tap into a database, that might be something that's really interesting. And to your point about where the power is, I think the power is really with whoever has the data and who can access the data. But I think it's going to be really exciting because, again, there's such an opportunity to grow this business.
No, I absolutely. And I think that certainly carriers need to be thinking about that data and how they're using that data and their ability to use that. And Mike, same question to you though as well then. So what about that balance of power between the carrier and the platforms? Do you see that changing going forward?
Yeah, look, it's an overused analogy, but if you look at Amazon as a benchmark of what might happen here, right? Amazon is a distribution company, and they have products on the shelf, and the power is with the distribution company right now, because they're accessing the client and they're displaying products to customers in a very consumable way. Now, the distribution company will never work without the manufacturers of product because it has nothing to sell. So I do think from a customer journey experience, comparing what's best for me, consuming it in a mobile device, which is how I probably want to buy these products, I think it's the distribution company, the intermediaries, the folks on the call today that have the responsibility, because any single carrier can't build the marketplace, and it is going to require some marketplace to succeed. But it's not without the carriers. The quality of the product, which is you get X dollar of death benefit for Y dollars of premium, and we deliver it to you in this number of days. So I just think it's going to follow the Amazon model, but I don't think it's a shift of power. One can't work without the other, but it is going to be the distribution interface that's going to be the front, and then the carriers are going to be the delivery, if that makes sense.
I suppose it's building on all those points, and the point Jason was also making around the carrier's ability to take data. Is there not in that position? I suppose, Scott, do you see that there could be a rationalization of the number of carriers that you have on panels going forward? Because currently, as a BJ, you're dealing with hundreds of insurers, but what's it going to look like going forward, do you think?
That's a great point. I look at it like this. On the one hand, if you give me, you say, hey, look, what would you like, and you hand me a menu of 1,000 different pizzas, I can find myself getting a little bit overwhelmed with the choice. However, when you approach it from a data perspective, I think that what you find is this really nice connection between the ability of doing relatively sophisticated analysis and then actually informed choice. So what I believe happens is that we actually have many carriers, each with a product that can particularly meet the needs of a particular proposed insured. With the analysis of it, it reduces it down to saying, look, I looked at hundreds of thousands of things. I looked at dozens of carriers, and this is what I think is the best fit. So that's really where I think it's like this combination of knowing I looked at every possible thing. I mean, if I only had 2 carriers to show you, well, it's a flip of the coin which one you get. It'd be so much more powerful to say, look, I did tremendous amounts of data work here, and it really boils down to here is where I think our best fit is. So it really gives that advisor the ability to kind of stand on the shoulders of the data.
And so quite exciting, all the opportunities this technology is going to create. And then, so Peter, you did touch on it at the beginning, but maybe expand a little bit more around, where do you see the real opportunities about new markets being opened, which, perhaps historically, there wasn't a willingness or desire by the BGA to go there because, frankly, they say, I can't make money with that because I have the same huge complex process for everybody. So where do you see those markets and opportunities emerging?
Sure. So we think that there's an opportunity to finally open up the mass affluent marketplace. Our perspective is that technology is not meant to take away from human interaction. It's to make that interaction more efficient. And we feel like that efficiency is something that's been lacking in that marketplace. So we're in the process of creating a platform that builds on the employer-employee benefit portal. That is going to allow that employee consumer to have additional resources at their fingertips. The ability to go on and do a needs analysis to help with cash flow management. And then make that determination, do I want to self-help myself for some of this planning, or do I want to engage the advisor? But regardless of which path the consumer decides on, the advisor is in control of that flow of information. And that's a way of keeping the advisor in the loop, reaching more people and bringing more value to the mass affluent.
Yeah.
That sounds fantastic. I'm now going to move to our last question, so I'm conscious of time. And Jason, first to yourself, what does success look like overall in the next several years, do you think, around the whole topic of what we've been talking about?
Well, I think that, as I mentioned a few minutes ago, that the opportunity is pretty tremendous. If you look at where this industry was in its heyday 50 years ago, selling 20 million individual policies a year into a population that's about half of today's population. Today, we're right around the 10 million policy mark as an industry in terms of individual life insurance policies sold per year. And so obviously many fewer sales into a much larger population, to me, spells really tremendous opportunity. We have lagged from a technology and automation and efficiency perspective, but we've made amazing strides in the last 10 years. Just look at this year. I mean, imagine if we had this global pandemic crisis 10 years ago. It would have been a lot harder for us to function as an industry. And we have enough technology now to kind of get through a digital process. But now I think, to the points around the pizza analogy, if you had a situation where you ordered a pizza and the pizza shop was really backed up and they were saying, hey, it's going to be 45 minutes or an hour, but for an extra $1, we can get it to you in 20 minutes. I think a lot of people would take that choice. And I think that whether it's instant gratification or the ability to avoid a prolonged administrative process, I think success looks like us as an industry finding those technology-driven efficiencies in the selling and selection process, so that the distribution, capacity in this industry gets back to selling to more clients and not putting our energy so much into slapping band-aids on a 150-year-old process that we've all learned to love and hate, but are more than ready to move on from. So I'm excited about it. I think it's going to happen, and I think it's going to happen over the next 10 years.
No, absolutely, Jason. And Mike, yourself, in final sort of words around that, what success looks like?
Yeah, no, I've heard every year in the 28 years I've been in the industry that there's a $1 trillion insurance gap. LIMRA publishes the statistic every year. So, when they stop publishing that statistic, then we've reached, success. I guess the one thing I would say about that is our products are so well suited to the way consumers buy things today, especially the way they buy their services. They pay $59 a month for their internet. They pay $39 a month for their data plan. They pay $12 a month for their Netflix. I mean, our products are exactly like that. You pay $20 a month for your term insurance. You pay $30 a month for your disability. It's just so, in some ways, it's so simple, and then we make it so complicated. So I think if we just conform a little bit to these norms, the way people are buying other services today, we unlock this great value, and we de-risk, balance sheets for many consumers in the United States. So I think it's possible. I think the technology is going to help us get it there. We could display it the way they buy other products. So I'm optimistic.
Sounds great. And Scott, yourself, your closing words around what success looks like.
Yeah, it's boy, I think Jason and Mike really hit it on the head. I mean, it's amazing to see it in terms of what the value of what we do in this industry and what we provide, and then just finding those ways. In a sense, we're trying a lot of different things, but I tell you, the thing that we approach now with bringing these tools to bear, and I really see it as a partnership between the distribution and the carrier side. You're seeing that more and more and more. The carriers, the partners that we have that we're working with, eager to really see their products get out into the wider market, to what Pete said as well. So this is, it's a great time to be alive in this space. It really is.
Absolutely. And Peter, yourself, final words on success, what it looks like over the next several years.
Very much in line with everything that the rest of the panel had said. I think it is this, nobody can do it alone. It is this synergy between distribution and manufacturer. As well as also we need to, as an industry, continue to reach out to advisors that have not traditionally approached in the insurance conversation with the consumer. That is going to go hand in hand. Technology is going to be one of those avenues that is going to help engage them in those conversations. So very optimistic as to the pace of the acceleration of going forward.
I must admit, I'd agree with everything that's been said. It's a really exciting opportunity to finally close that gap and make sure we're protecting more families. And it's a team effort, and we do it together in partnership. I'd just like to say a massive thank you to Peter, to Scott, to Mike, to Jason for joining me on this panel, for sharing your views on such an important topic to all of us. So thank you from myself, Mark Holweger, and Legal in General. Thank you.
Thanks, everybody.
Thank you.